If you're receiving NZ Super, this update could have a direct impact on your finances. Right now, thousands of New Zealanders are being paid less than they should be, not because their entitlement has changed, but because of one small detail on a form most people fill in without a second thought. It's costing some pensioners over $8,000 a year, and most of them have no idea it's happening. I'm David, and you're watching New Zealand Pension Plan, the channel where we break down NZ Super, government support programs, and important updates that could affect your finances, so you can make informed decisions and make sure you're receiving every entitlement you may qualify for. Today, we're talking about tax codes. I know, it doesn't sound like the most thrilling topic, but stay with me because by the end of this video, you're going to understand exactly why two people receiving the exact same NZ Super entitlement can end up with completely different amounts landing in their bank account every fortnight. And more importantly, you'll know how to check whether this is happening to you right now. In just a moment, I'll walk you through the actual numbers, the real dollar figures, so you can see precisely how much this matters. There's also an important detail later in this video about who is most at risk of getting this wrong, and it might not be who you expect. So don't go anywhere. Let's start with the basics because understanding this properly means understanding how NZ Super actually works. NZ Super is not income tested. That means how much you earn, whether you're still working, whether you own your home. None of that affects whether you qualify or how much you're entitled to before tax. If you're 65 or older and you meet the residency requirements, you get your super. Full stop. But here's what a lot of people don't realize. NZ Super is taxable income. It's treated the same way as wages from a job. And just like wages, the amount of tax taken out before it reaches your bank account depends entirely on your tax code. This is where things start to matter because the tax code you're on can be the difference between a comfortable fortnight and a tight one. Let me give you the real numbers because I think seeing this in black and white makes it click immediately. If you're single, living alone, and NZ Super is your only income, you're most likely on tax code M. At that code, you receive $1,110.30 a fortnight, after tax. That's the standard rate most people picture when they think about NZ Super. Now here's where it gets interesting. If that same person, same entitlement, same living situation, is instead sitting on tax code SA because they've got other income coming in and the code hasn't been set up correctly, their fortnightly payment drops to $790. Let that sink in for a moment. Same NZ Super entitlement. Same person. A difference of $320.22 every single fortnight. Over a full year, that's more than $8,300. That's not a small rounding error. That's a mortgage payment. That's months of groceries. That's a difference that genuinely changes what kind of fortnight you're going to have. And I want to be really clear about something here because there's a lot of confusion online about this. Your NZ Super entitlement has not been cut. The gross amount you're entitled to before tax stays exactly the same. What changes is how much tax is taken out before it reaches you. If you're on the wrong tax code, you're not being underpaid by the government in the way people assume. You're simply having more tax withheld than necessary, or in some cases, not enough, which creates its own problem we'll get to shortly. Let's look at couples too, because the numbers work a little differently there. When both partners qualify for NZ Super, each person is paid individually, and at the standard M tax code, each partner receives $854.08 a fortnight. Added together, that's a combined household payment of $1,708.16 a fortnight. But if one partner has other income and ends up on a secondary tax code like ST, their individual payment could drop to around $659.56. That's a difference of almost $200 a fortnight for that one partner alone, which affects the whole household budget, not just one person spending money. Take a moment to consider whether this applies to your situation. Are you working part-time alongside your NZ Super? Do you have rental income? A second pension? Is your partner in a slightly different situation to you with different income sources feeding into their tax code? If the answer is yes to any of those, please keep watching, because the next part of this video is specifically for you. So, how does this actually happen? Let's break down the tax codes properly because this is where most of the confusion starts. If NZ Super is your only source of income, work and income will automatically put you on tax code M. This is the standard code, and for most retirees who aren't working, it's the right one. Simple, straightforward, no issues. But the moment you have income from somewhere else, a part-time job, self-employment, rental income from an investment property, or even a second pension, things change. NZ Super might now become what's called secondary income, or your other income becomes secondary depending on which is larger, and secondary income gets taxed differently. That's when codes like SSH, ST, and SA come into play. Each of these applies a different, generally higher rate of tax because the system is trying to account for the fact that you've got more than one income stream contributing to your total yearly earnings. Here's the trap. A lot of people either don't update their tax code when their circumstances change, or they update it incorrectly. And here's something really important that surprises a lot of viewers. Unlike a regular job where you update your tax code with your employer, when it comes to NZ Super, you update your tax code directly with work and income, not with inland revenue, and not through an employer style form. If you've been trying to sort this out the way you would for a normal job, that could be exactly why things aren't lining up. I'll explain exactly how to check and fix this in just a moment. But first, let's talk about the two ways this can go wrong, because they have very different consequences. The first scenario is what we just covered. You're on a tax code that takes out more tax than it should. Your fortnightly payment is lower than it needs to be. It's not dangerous in the sense that you won't owe anyone money, but you are quietly missing out on income that should be in your pocket right now, not at the end of the tax year. The second scenario is the opposite, and this one catches people off guard even more. If you're on tax code M, but you actually have income from more than one source, you may be undertaxed throughout the year. This means your fortnightly payments look higher, which feels great in the moment, but it sets you up for a surprise bill from inland revenue when your tax position gets reconciled. Nobody wants an unexpected letter asking for money back. That's the kind of surprise none of us need in retirement. So here's the real takeaway from this section. Getting your tax code right isn't just about maximizing your fortnightly payment. It's about avoiding two very different but equally frustrating financial surprises down the track. Let me give you a practical example because I find these always make it easier to picture. Let's say Robert is 67, retired, and picks up some part-time consulting work a couple of days a week. For the first few months, everything runs smoothly. Then Robert notices his fortnightly NZ Super payment looks smaller than a mate of his who's in a very similar situation. After a bit of digging, Robert realizes his consulting income pushed his combined earnings into a different bracket, and his NZ Super was still sitting on tax code M, as though it were his only income. Because of that, he was undertaxed for months, which felt fine at the time, extra money in the account, but it meant a bill was quietly building up in the background, ready to land at the end of the tax year. Robert's situation isn't unusual. It's actually one of the most common patterns we see, and it's completely avoidable with a quick check. Here's another example, this time the opposite scenario. Janet is 70, lives with her sister, and has a small amount of rental income from a property she inherited. Because Janet assumed sharing a home with her sister meant she needed a different code, she ended up on ST, a higher secondary rate. Even though her rental income was quite modest, Janet was significantly overtaxed for the best part of a year, missing out on real money every single fortnight that she was fully entitled to. Once she updated her details with work and income, her payments increased immediately, and she was able to claim back some of the overpaid tax as well. Two very different situations, Robert and Janet, but the same underlying issue. Neither of them checked their tax code after their circumstances changed, and both of them were affected financially as a result, just in opposite directions. Now, let's talk about who this affects most, because I mentioned earlier it might not be who you expect. You'd think this mainly affects people who are still working full-time. but actually, some of the most common cases we see involve people who've picked up modest part-time work in retirement. A few shifts a week at a local shop, some casual consulting, a small rental property they've held onto for years. These aren't huge income streams, but they're enough to shift the tax code calculation. And because the income feels small, people often assume it's not worth updating anything. That assumption can cost thousands of dollars over a year. There's also a growing number of retirees receiving an overseas pension alongside their NZ Super. This adds another layer of complexity because both NZ Super and overseas pension income are generally taxable in New Zealand, and depending on the country involved, there may or may not be a tax treaty in place to prevent double taxation. If you're in this situation, it's worth getting professional advice because the rules can vary significantly depending on where your overseas pension comes from. And then there's a simpler, more common issue. Life changes and tax codes don't always keep up automatically. Maybe you paid off a student loan. Maybe you started a small part-time role after retiring. Maybe your rental property started generating income for the first time. Any of these moments is a trigger to double-check your tax code, but very few people think to do it because tax codes just aren't something we're used to actively managing once we're retired. There's also a knock-on effect worth mentioning here, and this is something a lot of people don't think about. While your NZ Super entitlement itself isn't income tested, some other forms of support are. Things like the accommodation supplement or eligibility for a community services card can be affected by your total household income. If your tax code is wrong and it's distorting the picture of what you're actually receiving, it can occasionally create confusion when your income is being assessed for these other types of support. It's another good reason to make sure your tax code accurately reflects your real situation so that everything else lines up correctly behind it. In just a moment, I'll walk you through exactly how to check whether your tax code is right and what to do if it isn't. This is the practical part, the part that could genuinely put money back in your pocket this fortnight. The first step is simple. Inland Revenue has an online tax code tool that takes just a few minutes to work through. It asks you about your income sources and tells you which code applies to your situation. If you've got any income besides NZ Super, whether that's wages, rental income, or another pension, it's worth running through this tool just to confirm you're on the right track. The second step, and this is the one people often get wrong, is knowing where to actually make the change. For your NZ Super payment specifically, you don't update your tax code through your employer, and you don't go through the standard IR330 form process that applies to a regular job. You update it directly with work and income. They administer your NZ Super payment, so any tax code change affecting that payment needs to go through them. If you've got a separate job on the side, that income stream is updated separately, usually with your employer using the standard tax code declaration process. So you may actually be dealing with two different tax codes for two different income sources, and both need to be correct for your overall tax position to work out properly. Make sure you're not missing out on support you may be entitled to by leaving this unchecked. It genuinely takes very little time to confirm, and the potential upside, especially if you've been on the wrong code for months or even years, can be significant. Now, I want to spend a few minutes addressing some of the misinformation floating around online about this topic because forensic accuracy matters to us on this channel, and I don't want you walking away from this video with the wrong impression. You may have seen headlines or social media posts claiming that NZ Super payments were cut for this year. That claim is false and misleading. The actual gross NZ Super rate increased on the 1st of April this year, in line with the annual adjustment tied to wage growth. For a single person living alone on the standard tax code, the increase was $33.46 per fortnight compared to the previous year. What's actually happening in these cases isn't a cut to anyone's entitlement. It's working retirees moving into a different tax bracket because of additional income, which reduces their net payment relative to what they were expecting. It looks like a cut from the bank account, but it isn't one from the government side. You may also have come across claims suggesting that if you work part-time, work and income will directly reduce your NZ Super. This is also false and misleading. I want to repeat something I said earlier because it's important. NZ Super is not income tested. Your gross entitlement does not change because you're working. What changes is the tax applied to it because your combined income moves you into a different tax code. The entitlement itself is untouched. It's purely a tax withholding issue, not a reduction in what you're owed. And one more thing worth clarifying. If you discover you've been on the wrong tax code and you were undertaxed, yes, you may owe money back to Inland Revenue once your tax position is reconciled at the end of the year. That part is genuinely true. But if you were overtaxed, which is the more common scenario for retirees with modest additional income, you're generally due a refund, not a bill. So don't panic if you think you've had the wrong code. In many cases, checking it works in your favor rather than against you. I also want to touch on something a little more general because it ties into everything we've discussed today. NZ super rates are reviewed every year on the 1st of April, adjusted in line with wage growth to help maintain your purchasing power. This is a legislated process, not a discretionary one, so you can rely on it happening every year without needing to apply or request it. Your fortnightly payment date itself stays consistent too, paid every second Tuesday directly into your bank account. And if you've got a Super Gold card, that continues to give you access to discounts regardless of which tax code you're on. Since it's tied to your eligibility for NZ Super, not to the net amount you receive. I mention this because it's worth separating out what's automatic and reliable, like your entitlement and your payment schedule, from what genuinely does require your attention, which is making sure your tax code reflects your real circumstances. Keep watching because I want to leave you with a clear, practical action plan you can use this week, not just information to file away. Here's what I'd recommend if you're watching this and you're not entirely sure whether your tax code is correct. First, take stock of your income sources. Is NZ Super your only income? Or do you have wages, rental income, another pension, or investment income alongside it? Second, use the Inland Revenue Tax Code tool to confirm which code should apply to your situation, given everything you've just listed. Third, if anything doesn't match what you're currently on, contact Work and Income directly to update your NZ Super Tax Code, remembering that this is a different process to updating a tax code for a standard job. And finally, if your situation involves an overseas pension or more complex income streams, it's genuinely worth having a quick conversation with a tax professional, because the rules around double taxation agreements can significantly affect your outcome. None of this needs to be complicated, and it doesn't need to eat up your whole week. For most people, this is a 15-minute check that could mean an extra few $100s every fortnight, or peace of mind that everything's already set up correctly. One last thing worth mentioning while we're on the topic of checking your entitlements. If your income has changed recently, whether that's from picking up part-time work, receiving rental income, or any other shift in your circumstances, it's also a good time to check whether you might now qualify for other support you weren't eligible for before, or conversely, whether a change in income might affect something like a community services card. Government support isn't something that's assessed once and then forgotten. It's worth a quick review whenever your financial situation shifts, whether that's NZ Super, WINZ payments, or anything else you may be receiving. Let's bring this together. NZ. Super itself hasn't been cut, and the entitlement you qualify for is based on your circumstances, not your income. But the tax code attached to your payment absolutely can change how much actually lands in your bank account. Getting it wrong can cost you hundreds of dollars a fortnight if you're overtaxed, or set you up for a surprise bill if you're undertaxed. The fix is straightforward. Check your income sources, confirm your tax code with Inland Revenue's tool, and if anything needs updating, go through Work and Income directly, not your employer. If you found this update helpful, make sure you subscribe to New Zealand Pension Plan. I'm David, and my goal is to help you stay informed about NZ Super, WINZ, MSD, and every important government support update that could affect your finances. Thank you for watching, take care, and I'll see you in the next update.